Bismillahirrahmanirrahim. Assalamu alaikum. Guys, our today's topic is related to understanding journal entries. What are the journal entries in accounting? We will learn today what are journal entries in accounting, factors to consider when doing journal entries, and journal entry examples. I will share with you 3 or 4 examples that what are the journal entries and how we are passing our journal entries, and what are the factors we are considering when we are passing the journal entries. So at the end we will see that how we can track our journal entries. So let's start with the beginning. What is journal entry? So recording of an event of a business transaction. Suppose there is an event that when we are buying anything, when we are selling anything, this is called an event of the business. So we need to record that event in our accounting books. So this is called a journal entry. When we are recording that event, we are passing a journal entry. Now for every action there is an equal and opposite reaction. What it means? When we are buying anything, we are paying cash, and against when we are paying cash, we are getting something. So there is an action which has an opposite reaction. We are getting something. Every journal entry must have a debit and credit and having equal values. So debit and credit, these are the rules of accounting. So should be one transaction should goes on debit and one should be credit, and both debit and credit should have equal values. So there will be an accounting equation which we need to consider. Assets is equal to liabilities plus shareholder equities. So this equation should be equal when we are going to pass a journal entry. Now let's see what are the factors we need to consider when we need to pass the journal entries. We need to see what accounts are affected by the transaction. There must be 2, 3, 4, 5 accounts or as much as. So we need to see what accounts are going to affect. Like if we are buying a stationery, if we are buying on cash, so there are 2 accounts involved, stationery and the cash. For each account there is an increase or decrease. One account will increase and one will decrease. Like when we are buying stationery on cash, so cash will decrease and the stationery account will increase. For each account, see how much it is changed. Sorry. Make sure that the accounting equation stays in balance, like assets should be equal to liabilities plus shareholders equity. Now let's move to the example so you will understand it well. XYZ company received a 500,000 loan from bank. This is an event occurred. So we received the cash from bank, that will be debit as an asset, and a liability increased by credit, bank loan payable 500,000. So here 2 accounts are used, cash and as an asset and bank loan payable as a liability. So let's see our accounting equation now. So assets is equal to liabilities plus shareholders equity. Asset is increased by 500,000 and liability is also increased by 500,000. So it will keeps our accounting equation balance. Now here example number 2. Purchased equipment for 650,000 by cash. So our asset, one asset is increasing, fixed asset, equipment, and one asset is decreasing, cash, which is credit 650,000. So assets is equal to liability plus shareholders equity. So one asset is increasing and one asset is decreasing. So the accounting equation is in balance. Here example number 3, purchase inventory for 90,000, total 90,000, 10,000 paid in cash and remaining 80,000 we make as a credit. So our inventory account, the asset account will increase by 90,000, cash account will decrease by 10,000 and liability will increase by 80,000. Now if you put them in an accounting equation, so asset is increased by 90,000 and an asset will decrease by 10,000. So the asset side will be 80,000 increase and the liability increase by 80,000. So both sides are equal. Now let's see how we can track our journal entries. The tracking, when we are passing any journal entries, remember all the journal entries goes first to our general journal. So general journal having the complete entries of any business or any accounting software. So you can track your journal entries from the general journal. The second, from general journal, the accounting entries are posted to general ledgers. So the main account where the journal entries are posted are general ledger. You can find or track the journal entries from general ledger. This is the end destination of the journal entries. So guys, this is the concept of journal entries in accounting. I hope you understand. Please subscribe our channel as it keeps motivating us to create more videos for you. Thank you very much and goodbye.